Hello everybody and welcome. As we like to do every week, we like to take a look at the past week's market activity and then kind of bounce around the market and look for something to trade. Well, here we go. If we look at the market, you can see really in the course of the last couple weeks we've gone nowhere, but it's been a bit of a wild ride. As you can see, it went up, went down, and right here volatility has gone down as usual as we went up, and then spiked again in the last week when we took a bit of a dive. But now we're kind of back to the low vol environment. 18 in the grand scheme of things is pretty low. As you can see, it's kind of like the lows over the past 6 months to a year, past 6 months. So S&P 500 kind of got nowhere, bit of a wild ride, but in the end we're kind of right back where we started a couple weeks ago. If we look at the NASDAQ, it always looks fairly similar. This one took a bit more. Volatility is a little bit higher. You can see it here at 22. So this one took a bit more of a dive on Friday, but kind of recovered at the end. And then of course the IWM always seems to lag a little bit compared to the other ones. You can see the other ones are kind of near their all-time highs. This one is still a little bit below that. Volatility, generally speaking, is always a little bit higher in the IWM because of that, because it's a bit more volatile. So what are we going to trade this week? Well, we just finished kind of earnings season, so we're going to go into Apple, and you can see at earnings took a huge jump up, and then it's been kind of on a bit of an upride since then, but volatility is still pretty decent. If you look right here, except for earnings, right, earnings always spikes. So if we take this out of the equation, you can see volatility is as high as it's been over the last 6 months. And also this is the high in the last 6 months, and we're kind of just about there. So what we're going to do is, I've already set this up. I'll come back and I'll show you kind of what we're going to do. But here's Apple. I'll just close this up. We're going to do the 47-day cycle because tomorrow that will be 46, which is perfect, right in our wheelhouse. The stock price is at 192. We're doing a skewed Iron Condor in this case. So I'm going to show you why. I can look at them both at the same time. I'll bring it up here. It's going to shrink. I'll pull it back down in a second. What I'm going to do is I'm going to leave a little bit more room on the downside than the upside. So what this means is I'm going to assume that there's a better chance the stock goes down over the next 45 days instead of up. So at 192, you can see this is $12 away. Where's the price? Right there. And over here on this side, it's only $8 away on the upside. And the reason I'm doing that is if we go over here and kind of put the numbers in, 200 is as high as it's been in the last 6 months. 180 over here is as low as it's been since earnings. And that's why I'm skewing it slightly to the downside. I'm saying, well, we're getting near the highs. So as a contrarian, I want to leave a little bit more room to the downside than the upside. And that's what this does. Because again, 200 is closer than 180. So I'm leaving room to the downside. This is called a skewed Iron Condor. So just so it doesn't get confusing, I'll pull it up here. So again, we're going to move the put further away, move the call a little bit closer, $8 and $12. In this case, they're $5 wide strikes, so we have to do a $5 wide Iron Condor. So what are we looking to collect? Well, remember, the minimum we're looking to collect is 33 cents per dollar width. This is $5 wide, which means I have to collect at least 165 or more for this to be a valid trade, and it is. So come tomorrow, if nothing changes when Apple opens up, we're going to go around $8 up, around $12 down, create a $5 wide Iron Condor. As long as we collect 165 or more, this would be a skewed Iron Condor, skewed again to the downside. We're leaving more room for it to drop than to go up. And again, the logic behind that is we're near the highs of the last 6 months, and the lows since earnings is kind of in that realm as well. So I'm leaving it as a cushion. As a contrarian, I think it has a better chance of kind of staying around here and possibly rolling down over the next 45 days as opposed to shooting up through new highs over the next 45 days. Purely my assumption. Again, you can make a different one, but that's why we're doing this one. So that's our Apple skewed Iron Condor for tomorrow.